First thing, Jason Moser, thanks for being here.
Hey, thanks for having me.
I appreciate you being the substitute teacher in place of Malcolm Etheridge while he is enjoying spring break this week.
Well, I'm no substitute indeed for Malcolm, but I'm happy to be able to take his place here and join you.
For a spot. So there's times I'm intensely worried about the American economy with, AI, a hot war with Iran, new college grads not picking up jobs. There's some worrying signs. But this weekend, I was going to my buddy's apartment, and outside of his apartment, there was a ramen festival.
Ooh.
And it was gated. It was ticketed to get into. Parking lots were full. People were packing the place. How much do you think it cost to go into a ramen festival? Street festival, you get drink tickets. You can get as much ramen as you want. But at the end of the day, you're parking in a gravel lot to go eat samples of ramen inside of the Denver Ramen Festival.
And you got to pay for the alcohol. You got to pay for the drink tickets.
No, you get drinks included.
That's included. Well, assuming that it's not unlimited drinks, I'm going to go with maybe that was like a 2 tickets or something like that. I'm a big ramen fan. I would think maybe that. I don't know. I would say $30.
125.
Whoa! Wow.
125. The place was packed. People love eating food in places that aren't a restaurant, that feel like an event, and they'll pay up for it.
Yeah. It's like everybody was like jealous of not being able to go to Coachella, right? They went to Ramen Fest.
There you go. So I was like, you know what? This could be maybe a green shoot for the economy, or just the economy is totally split, and these are our AI overlords that are enjoying ramen without worrying about the price.
I wonder if you're not hitting on something there, because I'd ask you, like, do you feel like you would pay that $120 to get into that?
If I was no, straight up no. Because part of it, I'm not a big drinker. Like, I'm not looking, I don't like going into food situations for the most part and going, how much can I eat to make this ticket worth worth the experience? Yeah.
Yeah. I mean, I'm kind of not into going into big crowds anymore. So that might steer me away, but I really do like ramen a lot, and I love a good cold beer. So I mean, I think I would consider at least paying for it, but I wonder if you're not keying in on something there, as that really just shows sort of the bifurcation there of like the haves and the have-nots, because it does feel like this economy is sort of tilting that way.
And I mean, we see it in live events all the time now. Like, people complain about the price of tickets, but if you got a hot sporting event or a hot concert going on, people are paying hundreds of dollars for that,
if not more.
And it's going on. Anyway, you want to talk about the market today?
Let's do it. The market today. Well, I mean,
the market today. I was going to do the preview of the show, so our engineer Tim Sparks can put in the music. But I want to talk to you about what's going on in the market generally, because things feel insane right now. I want to talk about this Allbirds pivot to AI, which is one of the strangest stock market stories that I've ever seen. And then also, I've recently done some reporting for The Indicator from Planet Money for NPR about some very strange trades going on in the futures market. So that came out the day before this show, and I'm going to hit on some of the financial markets aspects that I wasn't able to get to in that story as much. So let's get into it. All right, JMO, we've got a hot war with Iran. As of recording today, the Strait of Hormuz is back to closed. And as someone who pays attention to the market, I don't know how much you were paying attention to the Strait of Hormuz up until a few weeks ago, but I wasn't. Mm-mm. And, we've got a little bit of hype coming out of the AI story with, more hype, I guess, going into Anthropic, less hype in the OpenAI story. Questions about private credit, and the S&P 500 is still flirting with all-time highs, hitting it last week, I think on Wednesday. Yeah. But I know markets climb a wall of worry, but still, this seems like a strange time for the S&P to hit an all-time high.
It does seem that way. I mean, it's been a bumpy ride for sure, and everything right now just kind of hinges on what's going on in Iran. And yeah, I mean, Strait of Hormuz, I mean, I knew it existed, but it wasn't part of the daily vernacular until maybe a month and a half ago, and now it has become something that the market is just focused on every single day, and understandably, because there is a new headline regarding it every single day. It's open, now it's closed, now it's open, now we're having talks, now we're not. I mean, this is really kind of talk about spinning your wheels. And I think the market right now, it just seems like it's looking at this and saying, okay, ultimately, this will end. Some kind of deal will get done. Maybe thinking we've been through the worst of it. I don't know. But with the market up 4% or so, right? The S&P is up 4% or so year to date. I think it's also interesting to see multiples, price to earnings multiples have actually pulled back a little bit. And the main reason for that is what we're seeing is a lot of these forward PE ratios are lower, but the reason why is because there's some pretty healthy earnings expectations for the coming quarters. Now, I think the wild card there is going to be energy prices, because if we do see sustained higher energy prices, I mean, that flows through everything. That's not just us putting gas in our car. That's how everything gets to us and how the entire economy functions. We know higher energy prices typically result in tougher economic conditions for everyone. And that dreaded I word, right? Inflation. I mean, I don't think it's unreasonable to at least think or prepare for the fact that we may see inflation not only prove to be sticky, but even maybe tick up a little bit. And then that just throws that interest rates question completely out the window for a little while, at least.
Yeah. Do you remember the Office episode where Michael Scott discusses getting a vasectomy and a reverse vasectomy, where he's like, snip, snap, snip, snap. Yeah. I can't keep doing this. That's what constantly comes into my brain with the Strait of Hormuz stuff.
That is what it feels like.
We're going snip, snap back and forth. And it's also one of those things too, where it is threats on Truth Social. It is based on whatever is happening within whoever is leading Iran right now. But it does have the consequences are like, this is the kind of stuff that could lead to like famine in some places if you can't get energy markets going and oil out of the Gulf like that. So it's an extraordinarily real threat that the market seems to be just going back and forth on, trading more so on algorithms than the ability to make a long-term predictions, because to your point, you can't. And yet through all of this, New York Times pointed out S&P 500 has climbed about 10% just for the month. This is the best monthly gain since 2020, which is the last time we saw those really markets have been whipsawing since I have been following markets. But I mean, 2020 is when you really saw stuff shooting down, shooting back up. Mm-hmm. And that's the kind of thing that makes me a little nervous.
I think that's fair. It would be very interesting to see how these markets behaved if we didn't have social media, right? But obviously the internet, let's not pretend we didn't have that, but just social media. If there weren't those channels for people to get out and make just these wild claims or statements, we probably would see a little bit less volatility in the markets. But obviously that's not the case.
So I interviewed Michael Coe. He's an ETF strategist at Tidal Financial Group. He's an options and futures trader. And this was about the suspicious futures trades that have happened before, Trump announces a ceasefire or we're heating up war. And this is a longer quote, but he pointed out to me that I think is relevant for this show. And he said to me, quote, "This clearest signal about whether the uncertainty you're facing is negative or not is identified in the price action for risk assets. If rates are rising, if oil is rising, if equities are falling, if fixed income is falling, meaning that's going to be coincident. Nobody wants that, right? What the market wants is stronger labor markets, lower inflation, steady rising risk asset prices, and lower energy prices. It's a pretty simple formula, because what that means is people are better off. People on Wall Street are better off, and people in general are better off." And he went on to talk about we're not geopolitical experts, but now people in the investing world, or more so the trading world, are kind of forced to be geopolitical experts right now. But I really liked that idea of the formula of this is ultimately what it comes down to for a healthy economy: strong labor markets, low inflation, steady rising risk assets, and lower energy prices. It's not that complicated.
No, I think that makes perfect sense. That seems like it's the dream.
Yeah. Let's get to big banks, because I haven't talked to you about what's going on in the big financial companies in a long, long time.
Yeah.
And we've gotten earnings from them. Basically, things seem strong there. Trading volume's up, loan growth is up, big deals are heating up, private credit is, what is it? There's only one cockroach.
Maybe.
But And any thoughts on what you've been seeing from them?
Yes. Yeah. So, I mean, I primarily follow JP Morgan in regard to the big banks. And you're right. I mean, I think everything looked pretty strong there. They saw revenue hit a record $11.6 billion, thanks primarily to their fixed income and equity markets. And I think the fixed income trading segment was pretty noteworthy there. I mean, that revenue grew 21% during the quarter based on rising activity in commodities, shocker, along with credit currencies in emerging markets. The asset and wealth management division saw healthy inflows, which I think is encouraging. That was up 16% from a year ago, that growth in assets under management. And I think it's worth noting they did guide down a little bit on net interest income. That's just a function right now of the interest rate environment. But, I was going through the call, and it was just noteworthy. The word recession mentioned 5 times. Now, it was Jamie Dimon. He wasn't sitting there predicting a recession, but he's talking about kind of how they prepare for it, right? And if we do witness a recession, and again, I don't think he was predicting that, but he seems to believe that if we do, or when we do, it's going to be worse than people expect. So I guess that means to go ahead and save or hang on to that tax refund if you've gotten it already. And if you haven't gotten it, go ahead and put it away for a rainy day when you do get it.
Well, what could cause a recession? Really high energy prices.
Yes.
That slows economic growth. And, just because the Strait of Hormuz opens doesn't mean that it's going to close back up again. And here's my other question before I get back to the big financial companies. Let's say you and I are on boats out in the Gulf, and one of us has to go first through the Strait of Hormuz right when it opens. Do you want to go first, or do you want me to go first? Because I'm going to let you go first. I'm going to let your boat go through first.
I want to be a pioneer. I want to make that headline as being the first, right? So I don't mind. I'll take that risk. I'm older.
Wow.
Than you. So, yeah, I'm older than you. You got your whole life ahead of you, Ricky. I'll take that burden. Okay,
so for the listener, J-Mo just threatened to sacrifice his life in order to be a pioneer through the Strait of Hormuz. I really appreciate that. That was very kind of you, and it also kind of proves the point. But yeah, I think that makes total sense. Is that if energy prices keep shooting up, businesses are going to pull back elsewhere because this is a unexpected inflationary cost. I mean, and even the airlines, there's been stories on it where they weren't hedging for oil risks, and you wonder if other businesses were doing that as well. Hey, I'm sick of paying for these options contracts, and now oil shot up. What do we do? But back to the financial conversation, which actually did have to do with what I was talking about. But the financial conversation with private credit, and this is where Jamie Dimon was making headlines. The headline was that the next credit crisis will be, all caps now, worse than people expect.
Yeah.
But what he actually said is, quote, "There's been some weakening in the underwriting, and not just by private credit elsewhere. There will be a credit cycle one day, and I think when there's a credit cycle, losses will be worse than people expect relative to the scenario. I don't think it's systemic. It almost can't be systemic at that size relative to everything else." The last 2 sentences of that, which is it can't be, I don't think it's systemic, and it can't be systemic relative to the size of everything else, kind of contradicts the headline that this is going to be a huge global collapse predicted by, JP Morgan's Jamie Dimon.
Well, I think it could be. I think so. He's right. I mean, if you think about it, there's a big reason why big banks backed off of this stuff back during the financial crisis, right? And they never really got back. I mean, they obviously do a little bit of it, but it's risky, and it's just not necessarily in their wheelhouse. So we've seen private credit and private equity kind of, come together in order to take care of that market. So I could see pockets where it would be really, really nasty. But I think his point about it not being systemic is that we probably, we're not going to see the big banks, for example, getting sucked into this vortex, right? Because they're not really as big a part of it today as they were, as they have been historically.
So he pointed out private credit leverage lending is 1.7 trillion. That's a lot of money, but investment grade debt is 13 trillion. So that was kind of the context he was making to that argument. But the pockets of it that Malcolm has pointed out on the show is the pockets are people's retirement accounts, because this was something that a lot of financial advisors were selling to clients because, you've had steadily rising returns for a while. Why would you go with me instead of just putting your money into an S&P 500 index fund? It's because what if I could get you equity-like returns in the debt market? So it's the safety of debt but you're going to get high returns with this thing called private credit because we're going to be issuing, not junk bonds, but like junk payment bonds to smaller companies growing avocados or putting buses into like a random route in Washington, D.C. And so I think that's the concerning part, is not, the size of the bubbles, but where the bubbles are. Or, you have folks who they have money tied up into big tech companies, but also you have a private credit investment into data centers that are being built on spec. So you think you're diversifying into private credit, into the bonds section of your portfolio, but the whole thing is tied up into the same AI bet.
Yeah, no, I mean, that makes perfect sense. And I think that's just, when you talk about private credit, private equity, that is just a riskier proposition. And the numbers a lot of that stuff doesn't end up working out. So yeah, in the near term, you can juice those returns, but on the longer term, you're really facing some risky holdings there.
This episode is sponsored by Capital Area Planning Group. Capital Area Planning Group is a fiduciary wealth management firm that specializes in helping high net worth individuals and families navigate the complexities that come along with managing concentrated stock options, multiple income streams, and an ever-changing tax code. While our team of certified financial planners are well-versed in all things personal finance, our areas of expertise include equity compensation, estate planning, and multi-year tax planning. At Capital Area Planning Group, we believe in pricing transparency. That's why our fees are posted on our website, right alongside the various services we perform on behalf of our clients throughout the year. If you're tired of receiving the same cookie-cutter advice from your financial advisor, then don't wait. Reach out to us today at capgllc.com to experience a better approach to wealth management. Again, that web address is www.capgllc.com.
JMO, this story feels like an Onion headline. It actually was an Onion headline last week, which is Allbirds pivots to AI. And then they had their person on the street reacting to the story. One of the sketchier things I've seen in the market, which is that the stock of Allbirds rose at 1.800%, 800 on the news that Allbirds will pivot its business to AI compute infrastructure with a long-term vision to become a fully integrated GPU as a service, GPUAS. And I'm saying that correctly, GPUAAS, GPUAS. An AI native cloud solutions provider. In connection to this pivot, the company will change its name to Newbird AI. Any thoughts here on this pivot or Hail Mary from Allbirds, which by the way was a shoe company. It was a shoe company that got hot and then people didn't like the shoes as much, and now it's an AI company.
Yeah, I mean, I think you said it correctly. We say SaaS, right? So of course this is GPUAS. I think this has to be one of the most absurd things I've seen in a long, long time. Now, remember, like you said, Allbirds was a shoe company. They sold their IP and various other assets to American Exchange Group a little while back. And now American Exchange Group designs, manufactures, and sells fashion accessory, watches, jewelry, and footwear for major retailers. So that seems like a good fit there. But I mean, maybe they're just taking the lesson, like when all else fails, just say AI as much as you possibly can. And that is not, we've seen it a lot over the past couple of years when companies just start peppering their earnings calls with it. They just say it. They don't really connect the dots. And I mean, Allbirds raised a whopping $50 million in financing to get this job done, right? I mean, this is a sub $100 million market cap company. So I'm not saying they can't succeed, okay? But given the vast resources and technical expertise of all of the companies leading the way here, right? Alphabet, Amazon, the list goes on, NVIDIA. It seems like this was just the equivalent of a cat batting around a ball of yarn. And who knows where the ball of yarn is going to end up next. So, I mean, hey, good on them for trying something different because, the former business wasn't really working out so well, but I would steer very clear of this one.
Well, and I have a few reasons that this is a interesting bird to look at. I'll put it that way. Couple of reasons. One, it's not clear that anyone on their management team is an AI person.
But they just get the AI to do it. They just get the AI to do it. Yeah. Okay. Just hammer it out and Claude and Gemini and say, hey, man, can you build me a GPU-ass business? And I probably could get it done.
I'm also not certain what you can build for $50 million in the AI space for people to rent out.
That's my main point. Like, if they want to do this, I mean, they are going to think about this, man. I was just looking through this, putting together a piece on Alphabet for work, and it was going back to this notion that Alphabet has committed to $175 to $185 billion in CapEx just for 2026. Okay, so yeah, $50 million ain't gonna get it done. That's like an Amazon fulfillment center 10 years ago.
Yeah. So are you just renting space? Are you trying to WeWork AI compute space where, hey, we're going to rent out some AWS servers and do this? Or are we actually trying to build our own little server farm? Which, by the way, 50 billion, maybe it'll get you some NVIDIA GPUs. You got to cool the system. You got to power the system. You got to sell the compute space to people that are going to say, why am I going here instead of Amazon Web Services? But that's assuming good intentions, which we have done. Let me assume some bad intentions because from a PR perspective, from a media perspective, Allbird CEO, if your company, if you were in charge of this company, JMO, maybe you would go do some interviews after this press release. You would be hitting CNBC, you would be hitting Bloomberg, you would be getting out in front of this to tell your story. Allbird CEO, the veteran of the outdoor apparel industry, Joe Vernaccio, I'm not seeing interviews of him anywhere.
No.
And I'm seeing stories where he is declining to comment. And sir, you are leading your company allegedly through a pretty transformational pivot that you may want to communicate to investors. So why are you declining interview requests? And not only that, if you go to his LinkedIn page, if I search him on LinkedIn, if I search Joe Vernaccio LinkedIn on Google, I see a profile for him that has a bio and a description. And then when I click on the page, I get a 404 error code.
Oh, geez.
So where's Joe?
Yeah, well, I mean, that, I think to your point, those are signs that this is really something that's being led by bad intentions, which it's not surprising. It feels that way, right? So, I mean,
and this has happened before. In 2017, there was a company called Long Island Iced Tea Corporation. They decided they were pivoting to blockchain.
I remember that. Goes
up 2 to 5x on one day. But the other thing with this too is this is such a small, thinly traded company. At one point, I was looking at Fintel last week, 0.02 days to cover for the shorts to cover.
Oh, wow.
And that was, I think, based on some other, it's hard to compare the trading metrics, but it basically showed about 76% of the shares were short. So you could have a Carvana scenario where what's happening in the business doesn't matter because shorts are just getting killed on this because of a little bit of price action upward. Yeah. So it's not an easy guess of whether or not this will go up or down. And in fact, I think if you could make a gambling case that if you can get in the pump before the dump, you might make $10.
Oh yeah,
but
that's if you're a trader. I mean, I would say that's gambling, right? I mean, that's gambling in its purest form.
The real sign of this for me was with Schwab, which is if you want to short the stock. If you want to short a stock, you do it on margin. You take out debt in order to short a company. And usually you're doing this to magnify a position, which is that I have 30 cents in cash and I'm going to borrow $1 to short a company. And if you want to do it for Coca-Cola, it's about that because Schwab is saying, it's probably not going to go up 800% in a day. So 30 cents for $1. And for Allbirds, it's 500%. So you need $5 to borrow $1. Schwab is essentially saying, we are not letting you take out risky bets. If you want to short this company, you better have the cash to back this up. Anyway, last thing on this before I get to the other story. It did make me think, should other companies throw a Hail Mary right now? I had a few ideas. One, Kohl's. If I have a bunch of mall retail, I'm just saying we're an e-commerce warehouse now. We're e-commerce warehouse on spec. That's idea one. Red Robin Burgers, which has burned me before. We're going to become a barcade chain. We're focusing on the bar arcade in mid-market areas. And then my last idea is AMC Theaters is going to convert one screen in each of their movie theaters into a live entertainment venue. So we're putting on live comedy and music at some of these screens and converting them to bring in that additional thing. We're not just movies, we're also live entertainment.
Well, I mean, what was it? Ticketmaster and Live Nation that they just had that ruling that went against them, right, on the anti-competitive stuff. So maybe that AMC idea would work out.
There you go. And last, or one of, I almost said last thing. There's a couple more things, so I shouldn't say last thing. But one of the other things I want to talk about is this story I did on futures trading.
Oh yeah.
Specifically around, so if you want to find the story, it's on the Indicator from Planet Money's feed. And what the story is about is how there are these very suspiciously timed futures trades that seem to line up very nicely right before President Trump posts on Truth Social, specifically about the Iran war. So as we mentioned earlier in the show, you can imagine oil prices rise and the stock market falls when war heats up. The opposite happens when war cools down. We expect energy prices to decline, and investors like Jason Moser here, they like certainty. They want cool, calm, and steady. So if war's cooling down, you can see the market rising on that news. And what's happened is right before, this was the one I looked at was March 23rd, was minutes before Trump posted on Truth Social at like 6:45 in the morning, I think, or it was 7 a.m., something like that. People picked up, it was about $1.5 billion worth of S&P 500 futures and a few $100 million worth of oil futures. They expected the market generally to go up and oil to go down. What happened in the minutes afterward is that Trump posts on Truth Social, basically, we're going to stop bombing critical energy infrastructure in Iran, and we're expecting conversations to end. We're having great conversations with whoever's in the Iranian regime, and we expect the hostilities to come to a close pretty soon. And this was very oddly timed. Iranian state media later came out and said, we're not having any of these conversations. Yeah. And it wasn't tied to a deadline. Like, hey, by 8 p.m. tonight, we need to come to a deal or else. It was just kind of out of nowhere. And right before that, there was a bunch of money put on a very specific direction in the market. Unusual Whales reported that it was 4 to 6x larger than anything else going on in the market at that time.
Sheesh.
For those on video, Jason is shaking his head while I'm trying to recap this reporting. And I think this does a few things. One is that I hope people understand the CFTC, the Commodity Futures and Trading Commission, can absolutely investigate this if they want to.
Yeah.
And it's been confirmed through a couple of news sources, and I can confirm it as well. The CFTC is investigating the oil trades, which is good. And they're trying to send a message. Hey, we're investigating this stuff. And then there's still big oil trades coming through right before the Strait of Hormuz opens back up. Yeah. So there's a swagger here, which to me is odd because on these markets, there's know your customer rules. You have to say who has this account. So they could very easily find this out. But I think one of the big concerns to me, Jason, then I'll throw it back to you as I end this rant. I think it creates a lack of trust in American markets. And that's one of the strongest things about this country and our financial system is that while it's imperfect, we have a strong regulatory environment and people generally play by the rules here in the American financial markets. Yes, there's bad actors.
Except for Congress.
Except for Congress?
Yeah.
Yes, there's bad actors, but on a large scale level, this is a pretty regulated market, especially in stocks and futures and that kind of thing.
Yeah,
historically,
I say the Congress thing tongue in cheek. I mean, really, there are some bad actors there, and I really do hope they can get legal framework through that just gives us more confidence that they are behaving ethically. I'm not saying they all misbehave, but certainly we've seen that some of them do. I think when you look at what's gone on with these oil trades, I'm not saying that there has been impropriety. That's for investigators to decide. But it's hard to watch what's going on and not be a little suspicious, right? I'm not saying that there's been any impropriety, but it does look odd. I saw some sort of chain of events that I think it was the BBC that had kind of put together this chain of events and timestamps and everything. In the size of some of these bets that you mentioned, Ricky, I mean, that's another thing that stands out is just the size. And so being able to connect those dots, I think matters. I think I was reading something in regard to Polymarket It's something about some of these trades being conducted in crypto, which then makes it very difficult for them to even be able to trace, who originated it and who's behind it.
Jason, I think this is the story that I sent you.
Is it?
That I wrote, yeah.
Yes.
So with Polymarket, yeah, it's a futures trade.
Yeah.
But the problem is that if you're using the international version of Polymarket, so Polymarket wants to they want to do a mullet. They want to have business in the front and a regulated US exchange. And then they want their crypto party in the back, which is all bets are off. And we're going to do this international. And, as long as you're outside of the United States and not in a forbidden territory, like just get a crypto account and you're good, man. And these markets are way less regulated. It's much more difficult to see who's trading on here. And this is the one that actually has national security implications.
Yep.
Because these are the markets when you hear about those like very suspicious bets around like, hey, will Nicolas Maduro be out of office as the leader of Venezuela? I'm going to bet $70,000 the day before there's a mission to take him out. Or, when will the United States strike Iran? I'm going to bet hundreds of thousands of dollars on this. Not only is that, could that signal impropriety or problems? I'll just say, could that signal sketchiness? How about that?
Yeah.
But you have real national security implications, which is, you don't want to show your hand as a military of what you're about to do. But if you have people making money on it, then they can go look and say, oh, I'm a foreign adversary and someone's putting a bunch of money on the US invading Cuba next week. I wonder what's about to happen.
Yeah. And I think that's really one of the biggest challenges with these prediction markets is the ability to dictate outcomes. And I mean, if you just look at it simply from sports betting, right? I mean, there is a long history of sports, of corruption in sports betting, and that ultimately is done to dictate the outcome so that there is a party that wins. Now that's sports, right? I think I can sleep at night knowing at least that it's just sports and it's not, a threat to national security. But when you talk about all these different futures markets things, these prediction markets things, and you're talking about the ability to actually influence a given outcome and that ends up being a bad outcome, I mean that's a problem, right? We need to figure out a way to bring some transparency to that so that it doesn't put not only us but I mean other countries around the world at risk.
Yeah. And it creates a way for bad actors to potentially profit. There's a market on Polymarket right now, Polymarket International. Does Iran get a nuke by the end of the year? So if I'm an Iranian nuclear scientist, which I could never do, Jason, the math is too difficult.
Yeah.
I now, if I'm making a nuke for Iran, why wouldn't I put a bet on Polymarket? We're so close to making the bomb, and I know that it's going to come out in a few months. I can make some extra scratch on it with my crypto account.
Yep.
And these people are like, there's questions about it. There are ways to regulate this, and it should be cracked down on specifically for the national security implications. Yeah. I actually like some of the sports betting angles because it's removed the margin from a lot of sports books, which is that the same thing has happened in stock trading, which is you have these brokers taking big commissions, and then Robinhood comes along and says, we're going to collapse all of those commissions and make it free, essentially. It's not free on these prediction markets, but why shouldn't you be able to just bet against another player who thinks that the Colorado Rockies are going to beat the LA Dodgers tonight? Versus the house. So I think it's in some ways a little useful there, but man, these things have exploded into a golem that needs to be reined back in.
Yeah, and I know that is something that our Congress is looking into now. I only hope that they can come to some agreement on what to do moving forward and do it, in relatively quick fashion.
We'll see if they do. Yeah. But something I'm going to continue to cover and pay attention to. It is something that has I think it's one of the biggest economic and financial stories out there is what to do about these suspicious trades and also the rise of these prediction markets. I also learned that the average player loses more on prediction markets than they do on sports books. Because I think they're trading more than you are on those books, even though the margin is smaller and you're playing against better players in a lot of cases. That was from More Perfect Union documentary on YouTube, worth checking out. But yeah, that's kind of what I got on that, which is this stuff is sketchy and worth looking into. Last thing I want to say on it is in the futures market, one of the explanations could be is that these are snowballing trades, which is there's a little bit of an uptick and then algorithms start buying up the same position, similar to what happened with Allbirds of, hey, this thing's shooting up, so I'm going to just keep buying based on an algorithm that tracks market sentiment or whatever.
Yeah.
But that's the explanation I heard. Anyway.
It's the AI. Yeah, it's the AI agents. I mean, that's the algorithms are now AI agents, and they're running everything.
And then as I'm talking to you in an unrecorded fashion, any stocks you wanna talk about that you've been picking up lately?
Yeah, well, I think last time I was here, I had talked about just opening some positions in some cybersecurity names. I had bought shares of Palo Alto Networks and Zscaler. And I'm very, very much bullish on cybersecurity there. I think we've seen an interesting story unfold here recently in regard to Anthropic and Mythos, and like all of this potential threat to Anthropic just completely disrupting all of cybersecurity. I kind of felt like that was maybe a little bit too far of a reach there. And I thought it was interesting seeing that Project Glasswing that Anthropic announced recently, which it's a partnership, right? It's going to be about a lot of these companies working together as opposed to against each other necessarily. So maybe a little co-opetition would be the way to look at that there, but still very bullish on the future of cybersecurity.
Well, can we set some context there real quick?
Yeah.
Which is that Mythos was this, that's the AI model that Anthropic is afraid to let out of the bag. They've charitably given it to 40 of the largest companies, and they've said, hey, this thing has found very significant bugs in a lot of critical infrastructure that that makes the internet and society operate. Mm-hmm. And so we're going to tell, like JP Morgan and big tech companies, here, you can have at it. But it got to the point where this was serious enough for Scott Bessent, the Treasury Secretary, and Jerome Powell to get the big banks in a room in person and say, hey, this is something you all need to pay attention to. This is pretty serious. So anyway, that's the context to what I believe you're talking about.
Yeah. And I think, that good investing is a forward-looking exercise, right? And I mean, think about it just years from now. I mean, quantum computing is on the horizon. So what we're seeing today with what AI is doing, I mean, quantum computing is going to be a part of that AI evolution. I mean, it's not going to be replacing AI. What I'm saying is it's going to help power AI. And so we're seeing a lot of companies already working on this post-quantum cryptography in order to be able to protect the internet and protect our data. So just something to kind of keep an eye on. The last two stocks I purchased in March, I added two positions that I've owned for a little while. And these are decidedly not high tech, right? And that was by design. But I bought shares in Waste Management, a company that I've owned for a little while, and United Health Group. And I bought these primarily for their dividends. Waste Management, I think, you look at that just as a giant in the space. It's owner-operator of 257 landfill sites around the U.S. and Canada. That's the largest network of sites around. And you think about the red tape and the barriers to entry and even getting into this line of work. I mean, that makes it just a tough competitive position to encroach. And I think if you look historically, you can see over long periods of time, Waste Management has done very well for shareholders. So my thinking there is that I want to own this one for years and years to come. And with United Health Group, more or less the same idea there. I think United Health Group, a little bit more of a value play in this case as well, just given the challenges that they've gone through, the leadership transition, the revised guidance, all of sort of the
leadership transition.
Yeah, well, that was old news, but you look at like just the when the government comes out there and says, okay, well, this is what we're going to give insurers, and I mean, we had that announcement recently where that just number was far lower than what I think a lot of investors were expecting. We saw United take a big hit. I think, love it or hate it, Ricky, United Health Group, I think, is almost too big to fail. Right? Wow. I think its scale is just, it makes it very difficult to see it going away. I think it's going to be a big part of how healthcare in the U.S. evolves, but I think this was a pretty good value play as well. And again, a nice, strong, reliable dividend, very cash flow rich businesses. And so those are the two that I added to recently.
I know. I appreciate you sharing that. I see the problem as I look at United Health Group. I see it as the value play. I can't click the button on it.
I know it was one of those ones I just thought, I'm going to go ahead and do it just because. I mean, I believe obviously in healthcare, and while our healthcare system isn't perfect, I mean, it's at least something. I mean, I've had to go through it. I'm sure you have too, and Yeah, I think for better or worse, United Health Group is just going to be one of those companies that helps iterate and ultimately evolve our healthcare system.
Our next guest is Mark Cuban. We're going to bring him on the line right now to talk to Jason about buying shares of United Healthcare and see how he feels about that decision.
I think as an investor, he might find it shrewd, but as a human, he might not find it so appetizing.
Well, he's doing the cost plus drugs. Have you seen that's his new thing is I'm Mark Cuban and I'm fixing healthcare, which shout out to him, respect to him.
Absolutely. More power to him.
Anyway, I don't have a great answer on this. I've been picking up some index. What have I picked up recently? I've been staying cautious. I mean, I've been following the software trades we've been talking about on the show of stocks like Okta and ServiceNow. Yeah. I don't have a great new idea every week. And we were talking about this before the show. You don't need to. You only need a few. You only need a few good ideas, and it's okay to just plow money into index funds.
That's what I do regardless of what's going on. I get paid twice a month for my job, and I'm happy to know that every time I get paid, a nice little slice of that paycheck is going into the Vanguard Total Stock Market Index. And that way I know I'm always investing, I'm always participating. And then when the individuals' names come up, then I have the opportunity to dig a little bit deeper, but I'm not on any timeline as far as that's concerned.
Man, Jason Moser, I'm so grateful for the time and you've spent with us, the insight you've shared, and I'm always happy to keep talking to you.
Well, it was my pleasure. Thanks again for having me, and I will come back anytime you guys need.
Information shared in this recording and by its guests represent the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.